Hi, IBD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. Heading into 2026, economic uncertainty is a given. That plays a major role in assessing next year's labor market. After a year of volatility and shifting hiring trends, what can we expect for jobs in 2026? And what do investors need to know about how jobs data could impact Fed rates? Ziprecruiter lead economist Nicole Bachaud is here to discuss the outlook for the 2026 job market. All right, that economic policy uncertainty index, it hit record highs in 2025. That's in part because of policies around tariffs and immigration remaining in flux. How does this influence the job market?
We're seeing uncertainty really lead to a lot of stagnation in the job market across 2025. Employers are looking to maintain stability in their workforce, and workers are looking to stick in place and to keep a steady paycheck versus taking a big risk to look for new opportunities. Both sides of that market, both from employers and from workers, is really leading to a lot of stagnation and a lack of big movements in either direction. That's really what's been defining the last several months of the labor market.
All right, and unemployment, it's early December, it's about at 4%. What do we expect to see for hiring next year?
2026 is going to be defined by gradual growth in the labor market. We will see a pickup in hiring activity as the year progresses, as a lot of those uncertain factors become a little bit more clear. Tariffs, if we're able to understand more what direction and impact tariffs are going to have, their longevity, those kind of aspects, and that information is going to be really important for business decisions to see more hiring activity moving forward.
And how about job creation numbers? What's the outlook there?
So we'll likely see a little bit higher job creation numbers than we had overall in 2025. We'll expect to see some pockets of opportunity in certain industries like healthcare, where demographic factors are really pointing towards higher demand for job growth. More cyclically tied industries, think like manufacturing, might see more of a dip in the beginning of the year as we continue to see impacts to consumer spending and to confidence overall. But that will loosen a bit as the horizon becomes a little bit more clear.
What's likely to be the worst hit industries?
So the industries that have seen a lot of challenges over the past several months will likely bleed into the beginning of 2026. Federal government has been the industry where we've seen kind of the biggest hit to employment levels, to job openings. That's where we've seen higher rates of separation, and the quits rate has been increasing there. So that will likely continue on for the next couple of months as existing workers remain burnt out in their positions. When we look to kind of where we're going to see the strongest growth, again, healthcare is going to be, again, the backbone of the labor market, much like it was in 2025.
And what about the strongest markets for hiring?
Yeah, healthcare is going to be the number one place. We're seeing an aging population and an aging workforce at that. And as we continue to see the population shifting towards an older median age, we'll continue to see strong demand for healthcare, especially positions like nursing and other support roles that are really going to be vital to keeping that afloat.
And how is Gen AI and the AI revolution continuing to impact the job market?
AI has so far had not that large of an impact on movements of the labor market overall. We're going to see some shifts more in specific industries. Professional and business services and technology are going to see larger impacts than things like food, service, and accommodations. But as we move forward, I think the biggest opportunity that AI is really presenting is the ability to progress and to increase productivity across the board. Employers who are really focused on training, removing barriers, and creating more flexible opportunities for AI to be unlocked in their workforce are going to see bigger opportunities moving forward to do more with less and to have larger impacts on their business lines.
And potential Fed rate cuts and inflation trends. How will these impact job creation?
So we've seen Fed rate cuts over the last couple of months. Those have yet to really translate into much higher hiring activity. We did see in today's JOLTS numbers an increase in job openings in October, the preliminary October data. That could be a signal that those loosening rates are finally starting to lead to a little bit more activity that will translate into more hires moving forward. That's the goal. That's what the Fed is intending to do with those rate cuts, is to keep unemployment low and to boost more activity to continue to spur hiring activities. And we will continue to see if those factors play out in line with inflation numbers.
And I guess inversely, how will job numbers potentially impact Fed decisions?
We're really going to be looking to see how unemployment is moving. The anticipation is that unemployment will continue to marginally increase, probably somewhere around 4.5%, 4.6%. And that's going to be the biggest factor that's going to lay on to Fed decisions moving forward. Unemployment compared to inflation, right? They're really trying to balance making sure that prices and employment levels are both remaining in check.
And Nicole, what's your prediction for the job market based on recent online hiring trends?
What we're seeing for the labor market moving forward is really going to be this gradual growth. We're going to see businesses kind of starting to pick up steam as uncertainty becomes a little bit more removed from the market, things like tariffs, immigration policy, geopolitical concerns. As these things kind of start to lift, we will see a pickup in pace in hiring activity moving forward.
And finally, Nicole, how will the 2026 labor market influence the stock market?
So we will likely see, as I said, a gradual growth in hiring activity, and as businesses continue to expand in a little bit more of a sustainable way, that will likely have a little bit more of a neutral impact on the stock market. When we look at 2022, where we had this huge hiring boom, a lot of business activity, a lot of stock market activity at the same time, but a lot of businesses had to retract and scale down after a really aggressive period of growth. We're not going to see those kind of swings coming into 2026. It'll be a much smoother, much slower progress that will lead to more stability and balance across the market.
All right, Nicole. Well, we'll be watching. Thanks so much for joining me. This is Industry Insights. I'm Meredith Heyman. Stay right here on IBD for more. We'll see you next time.